Hello traders, this is a DAX recap video for April the 1st, for Monday, first day of April, and this in front of us is the chart that was posted with the morning notes, as you can see here on time at 8:04 Central European time, so almost 1 hour before the open. And as said in the weekly video, on Friday, March the 22nd, we had this huge trend down day, and then we had all week grinding higher in buy the dip fashion with a lot of higher lows, and market that is really was contained inside of this channel. But at the end of the week, market really didn't go above this zone, and this zone is going to be very important for us. But over the night we had some bullish news coming from China, and that produces a gap up on every market, DAX included, so DAX, S&P and other markets. And this was the situation really here in the pre-market, so gapping into the zone, going higher to touch the next zone, and then making a pullback into this larger time frame zone. I said in the morning notes that this larger time frame zone could serve as a gauge of market strength and maybe an entry on a pullback. And since all pre-market activity was above the previous cash close, that we could expect some sort of inventory correction, and basically that was more or less this. So a bit of inventory correction, and then a continuation move to the upside, and then the market that wants to go higher, that kind of market is going to be above Friday's high zone. Also, that given the size of the current ranges, we could expect that this zone 710 to 725 could cap the upside move. And now when we are looking at the chart, exactly that was really happened, and this trading plan was on the money. But now how to catch really this? So when you observe that you have a gap up and price is going above the zone, hitting next zone, making a pullback, so now this was the resistance zone, it was broken and now acting as support, and market spends here 1 hour before the open, so between 8 and 9 a.m. here, and also bouncing from this channel that I have given you on the chart shown before. So look at this, a retest of the broken channel also inside this larger time frame support, larger time frame zone that was a resistance and now could act as support. All of this is enough of a reason for us to attempt a long on the open, because now market is opening inside the zone, and with our stop below the zone, fully prepared in this period of time, fully prepared that if market fails here and goes to the Friday high zone, to attempt a long here again, because we do have a series of higher lows, and this is a buy the dip market so far. And you could observe, and you could even close partially or fully your trade if you're satisfied with a quick 40 pointer to here, to this zone that was tested, and this here was basically a pre-market high. Now the market is bouncing from the pre-market high. Here, if you missed this long, here was additional entry point for you to enter here again. And as said in the morning notes, if you see any kind of good momentum, do not fade this zone. Now this zone made and price made a pullback here of around 20 points, and now made a move higher. And when you see that market is going higher, and you know what kind of current ranges you can expect, you can already place your limit order for closing the trade. So this was the first target here, and the second target to front run this zone, because this zone is from 710 to 725. You could place your stop at I'm sorry, not stop, but closing order at, let's say, 700. Just wait for the market to give you a fill, and inside this movement to just move your stop higher. If you were patient enough to hold for all of this, and now market is here, Now your stop is here. Because you have, look, market just made some stairs here. You can observe like this. You know, stair, one stair, and another stair, and another. Three stairs, basically 3 floors. You can call it what you want. But after this kind of move, your stop is here. After you see this bouncing from this previous high, now you move stop higher, and after this candle your stop is already above this, because now it is close, relatively close to the zone, and that is it to here. And if you were holding this trade from the open, you could make up to 100 points in this long. And after that, most probably this was the calculation of the 8-year full 8-year move, calculating it from here like it was a breakout, no matter if this is just a gap. So this candle really doesn't exist, this is a gap. But the move that was started as a gap from here to here is a full 8-year move. And if you don't have an order here, or you didn't get a fill after you see that market is failing and really didn't touch the zone just by 1 or 2 points, you can only imagine that sellers are front running this zone, and that you should really take a short here now with your stop above this high, and be ready for it to go to again to this zone that was broken by this move, or even to hold a bit longer and make your closing at or above this zone. As always, I recommend you to front run the zones for exits. And now you observe if you didn't react here, and you observe the second attempt to test the zone. So first attempt, buyers are front running the zone. That is the sign of the market that really won't allow you a better pullback. And often this kind of movement is misunderstood as something that is weak, but it is not true, because market was holding the gap. They was just holding above it, showing strength, showing that they don't allow the market to go lower. And you can see the absolute same thing on US indices also. This is the S&P, and S&P after the gapping up, they were just making some kind of grind and ranges. They are just doing here what they are doing here. They are squeezing the sellers. And Nasdaq made here a pullback to this after the gap. First pullback is important. You can draw yourself a rectangle, and here it is, the level that they have defended, and they're just going sideways. And the same is for Russell. And look at this. This is the gap, first pullback, and that was the level. And I'm sorry that you have. I'm sure that you have heard about that saying, "Never short a dull market." Yes, never short a dull market in the bullish move. Now we have a bull move, and after the bullish move, when you have this sideways activity, this is nothing else but you can call it horizontal bull flag. You can call it whatever you want, but that is the preparation for the next up move, most likely. And now on the 4-hour chart, the grind is continuous, and here this what we had on the 710 to 725 was just another test of the 200. So this was another test of the 200, and by the end of the future session maybe they could make some marginal new high above this. We shall see about that. So that was the opportunities. Again, a good roadmap here in the morning notes, and tomorrow another morning notes and chart with zones. I wish you good trading and good night.